You're listening to the REI Marketing Nerds Podcast, the leading resource for real estate investors who want to dominate their market online. Dan Barrett is the founder of AdWords Nerds, a high-tech digital agency focusing exclusively on helping real estate investors like you get more leads and deals online, outsmart your competition, and live a freer, more awesome life. And now, your host, Dan Barrett.
All right, what is up, everybody? This is Daniel Barrett here from AdWordsNerds.com. As always, the place to go if you need more leads and deals for your real estate investing business online. Look, you know where to go. It is AdWordsNerds.com. Folks, we have been doing this and only this online marketing for real estate investors for more than a decade. It ain't an accident at this point. I could safely say I at least kind of know what I'm talking about. And this week, I have an awesome guest that really knows what he is talking about. And I'm talking about Chris Miles. Now, Chris Miles is here from moneyripples.com. That is a website. It is also a podcast. It is also a YouTube channel where Chris spreads financial advice, specifically focusing on what you might say are non-traditional investments. Chris calls himself an anti-financial advisor because he basically believes that the traditional financial advice that a lot of us get is kind of bunk, and that if we really want to retire and really want to get to a place where we only have to work because we choose to, not because we have to, we've got to think differently about how we invest and what we do with our money. Now, look, I am a business owner. I work with real estate investors every day. I know a little bit of financial lingo, but I don't consider myself super financially literate. I'm not like a big investment guy by any means. And Chris did a really fantastic job of explaining some pretty complicated things and making them very approachable. So if you have any interest in ever retiring or, doing stuff with your cash, man, Chris is a great person to talk to. I cannot wait for you to hear this interview with Chris Miles from moneyripples.com. Chris Miles, welcome to the show, man. Thank you so much for being here.
Hey, I love being here, and I appreciate you saying that twice, because I was on an interview with Entrepreneur Magazine where they said moneynipples.com. I was like, listen, you're going to find something totally different than me on there.
There's there is like some kind of weird anti-tax show where they're going to make hay out of the nipple metaphor and it's going to work for them. But no, we are talking about moneyripples.com. I have a whole bunch of different things I want to talk about with you. You have a really deep financial background that I think is going to be super valuable for anybody listening to this, whether you are a real estate investor or anybody in business, even your just personal life. I think this is going to be a really fascinating conversation. However, for people who aren't familiar with you, how would you describe what you do and what your business is today?
Yeah, I mean, you mentioned in the intro that I'm the anti-financial advisor, right? Which just means that I pretty much think that financial advisors and money managers and mutual funds in general suck. So that's pretty much what it comes down to, right? Really what we do is we help two things. We help people one-on-one strategize ways to help get out of the rat race, actually have enough passive income where they're work optional. They work because they want to, not because they have to. Help them do that, connect them with deals. And then we also have a whole other branch of our business, which is around infinite banking. The crazy thing is I don't have to do any of them because I'm financially independent myself, but because people suck at what they do, especially when they talk about passive income or they talk about, infinite banking and they still suck at it, that's why we exist. So even though I should be retired on a beach right now. So kind of give you some background, though. I didn't start out that way. I actually started out as a kid, like most kids, raised in a middle-class home, hardworking parents, taught you good values about hard work and telling the truth and your word is your bond and all that kind of stuff, right? But the one thing that my parents didn't really teach me about was money. Well, the one thing they did teach me with money, though, was the lack thereof. Hey, we don't have enough money. We can't afford this. What do you think I am, made of money? Money doesn't grow on trees, Those are all the kind of stupid phrases you hear growing up as a kid. I even heard phrases from my dad saying, I'm going to work until I'm dead because my job will literally kill me. He actually had strokes by the time he was in his 40s and even heart attacks by his 50s. Whoa. Surprisingly, he's almost 80 and still around with 12 stents put in his arteries.
What was he doing at the time when he was like, my job's going to kill me, I'm going to work till I'm dead?
Oh, just the typical, he kind of had the depression mentality, right? He worked really, really hard, thought you could stay with the same company forever. And then that company would lay you off, and it didn't help. Of course, my parents going through a divorce, that was hard on him too. So just stress, stress in general is why I did it. And as a kid, I never wanted to be like that. I wanted a different life. And I guess most kids, we always say, we don't want to be like our parents, right? But that was true for me because I didn't want that lifestyle. I wanted freedom. I wanted to control my destiny, which is why, even though I went to college, first one in my family to do so, I actually dropped out just before I got my bachelor's to become a business owner. And I was looking for something to do. And the first thing that came up that intrigued me was being a financial advisor, because I was kind of like, if you ever watched, The Wedding Singer, with Adam Sandler, right? And he goes in for that job at the bank, and he's like, well, what's your experience? Like, well, I got a jar on top of my fridge. I like to put more money in it. That's where you come in, right? That's kind of what I was like. I didn't really have a lot of financial background or knowledge, but hey, if you can basically pass a test with 70% and not have a criminal record, anybody can become a financial advisor. So I did. And I actually did that for several years. And then pretty soon my dad started asking me for financial advice. He says, Chris, when are you going to actually help me? You're helping your clients. How about helping me out? So I sat down at that very same table. He always gave me that great advice of save everything, spend nothing. I mean, the guy was such a tightwad. I mean, like, you could seriously, Dave Ramsey would look up to him and say, ooh, that's the guy I want to be like when I grow up. That's what happened to Dave Ramsey. He knew my dad, right? I'm sure, something like that. So anyways, so he was just that kind of tightwad. So I sit down with him. He said, hey, Chris, I'm 61 years old. Y2K sucked. It did not help my portfolio at all. What can I do? And as I'm looking at his finances, this was 20 years ago, I'm looking at him like, well, Dad, even though you've been stuffing your 401k and you're debt free, he was so proud of that, right? Even though you've done all these things, you've done everything right. I'll be honest with you, you better hope you die in 5 years, because that's how much money you have before you run out if you try to retire today. Okay, Chris, well, that's not what I want to hear.
Right.
What other options do you have? I said, I don't know. You did everything right. You stuffed in your money in the 401k, got your match, you put it in mutual funds, you're debt free, you have this house. I'm like, you got an asset here. I don't know what you could do. I mean, you could cash out and refi it and pull money out and invest it. Okay, Chris. All right. I'm against debt, but I need something here. How do I do that? Where do I invest it? I'm like, I don't know, because you can't legally invest that in mutual funds. And even if you could, I wouldn't trust that the market will go up, because I don't know what the future will hold. And I was in this dilemma, and it really bugged me that I couldn't even help my dad. And then I started to realize that as I started talking to another real estate investor, he's like, well, how many of your clients are financially free, Chris, where they don't worry about money? And as I looked at the ones, even the ones that were retired, like retired physicians, they still worry about running out of money. And then he said, okay, Chris, well, good job. Nobody's financially free. How about this? How many of you guys as financial advisors are financially free? Not off the commissions you're earning, but actually doing these mutual fund investments. How many of you are actually financially free? And as I really was honest with myself, and I looked around mentally, around the office, there's over 100 of us in that office. There had been guys that had worked there since the late 1970s, and they couldn't retire either.
Yeah.
And so I had this integrity crisis going on, right? Do I do like what some of my friends kept doing, even after they found the truth? They just stay in that lane. They just put blinders on and say, well, at least I'm helping them do something that's better than nothing, right? And so they do that. Or do I leave? I chose the latter. I was like, in 2006, I'm out. I'm never going to do this again. I'll never teach about money. I'll just be a mortgage broker, and I'll teach ballroom dancing on the side. And so I was doing that. And then pretty soon later that year, as I started to learn from my friends that were in real estate, I was able to be financially independent myself, where I had enough money coming in that I could quit. And that was a shocking place to be. I was 28 years old, didn't even know what to do with my life. I didn't even think I'd be there that fast. I thought if I were lucky and I was cheap enough, like my dad, and saved up enough, maybe I'll have $2 million in a mutual fund to live on 3% a year, which is like that magic number, not the 4% rule. That one's been debunked long ago. But 3%, I can live on 60,000 a year. And back 20 years ago, 60,000 a year sounded like a dream, pre-inflation. So anyways, that's what happened. And eventually I came out of retirement to teach people how to do it, because they kept asking me. Even when people asked me what I did, I would stall and say things like, I sell drugs, because I'm like, what do I tell them? Like, I'm kind of like a real estate investor. I've got some business streams of income coming in that, I'm doing nothing for, but how do I describe this? And so I just say, I sell drugs, because that was an easier answer than saying, I just found out ways to create passive streams of income, and that's really what I teach today. And really, fortunately, I mean, we've helped hundreds and hundreds of people do that.
That is a really interesting story. There's a couple different angles I want to pull out of that. Not the least of which I even wrote down. It's like, I need to ask you what the hell infinite banking is. So we're gonna cover a lot of ground. Before we do that though, I want to go back to your career as a financial advisor, and I know like now you've got a pretty sort of like negative look at it, but I'm wondering that moment where you sat down at the kitchen table with your dad, right? Like it's not any client, it's your dad, right?
Yeah.
And I'm wondering if what that was like for you emotionally, right? Because it's this weird sort of reversal of roles. But two, what did that make you realize about the sort of different information you were giving your dad because he's your dad versus the kind of information that advisors typically give their clients, right? There's like, sometimes there's going to be a disconnect between, if somebody comes up to me and says like, hey, what should I do on Google Ads or whatever? Because that's what I do. I'll be like, oh, you got to do blah, 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 blah. If my mom came up to me and said, I've got $5,000 I'm going to spend it on Google Ads, I'd be like, oh, okay. All right. Like I might treat it differently, right? So like, what was it like for you emotionally? And two, what did that make you realize about the different ways that the different kinds of information people give out, if it's just a client versus whether it's like friends and family and loved ones?
Yeah, I think for me, I'm one of those people, like, I just can't BS very well. So, I mean, I treated him like every other client. The difference was I was really nervous though, because he was the guy that was always like lecturing me all growing up. Right. And so there's a lot of intimidation factor for me. He was probably the second most intimidating person I talked to. The first being the guy was a very successful business owner with a family that, pretty much sold off all their car dealerships to the guy that owned the Utah Jazz,
Gotcha.
Like that was a nerve-wracking appointment, but he was probably the second most nervous appointment just because of that personal relationship. Because I mean, come on, he wiped my butt when I was a kid, and now I'm the one trying to give him advice. I know that was a mental image you totally wanted to see.
Yeah. No, I was like, that comes up in every podcast. I don't know what to say. It's just a thing that comes out when I talk.
Yeah. So it was different, but I'll tell you, it was serendipitous because I was already starting to question things, right? I was already getting little chinks in my armor. Like I mentioned, the most intimidating meeting. I remember that business owner, and this applies to anybody who's in real estate too, because you own a business. If you're a wholesaler or a flipper, it's the same.
Yeah.
But he's like, because I remember doing a presentation with my brother-in-law. He was that one that came from that wealthy family. And he said, all right, Chris, let's just say I give you $10,000 to play with today. You're saying you can make me 12%. Right. Because after my little presentation showing him the stock market since 2000 BC, right? He's like, here's 12% in small cap, 10%, 10.7% in large cap stocks. Here's real estate at 3% right there with inflation. It sucks. Don't do that. And so, he's like, okay, well, if you're saying I can make 12%, you're saying if I give you $10,000 to play with, you're saying you can make me $1,200 this year, right? I was like, well, I can't make any guarantees because past performance is not indicative of future results. That little disclaimer. But yeah, you could. He's like, but Chris, I can take $10,000. I can invest it by buying a semi truck because they still had a few dealerships they had left. It's like, I can go buy a semi truck, put a down payment on it for $10,000, turn around, flip it a few months later, make $30,000. So 10,000 make 30 or 10,000 make 1,200. Why would I invest with you?
Yeah.
And I was like, you should be diversified. You should pull your eggs in one basket. Besides, business is risky. Ironic that I was in business myself, trying to pitch him on why he should invest with me. And really, it was kind of like, really what it was like liar, liar, right? And which is pretty much why he didn't do business with me. Because, liar, liar, when he's like, objection, he's like, why? Because it's damaging my case. Right. Overruled. Like, I know. It's like, that's kind of what happened. Like it damaged my case. It made perfect sense. And a lot of the other things started coming out, like the real rate of return of the stock market. The S&P for the last 30 years, the actual return, not the average based on averages, right? Because if you've ever heard the example, you lose 50%, you can't go and make 50% to get back to breaking even, right? That's what we all thought as financial advisors. And I remember some guy came and trained us. He's like, no, if you go from $100,000 down to $50,000, making 50%, you only made $25,000. You're only up to $75,000.
Yeah.
So if you lose 50, you need 100% rate of return. So if that happens 2 years, you lose 50 1 year, gain 100 the next year, even though your real return is 0, your average rate of return will show 25%. And it was like a big light bulb moment for me as a financial advisor. And I remember cornering one of the guys that said, hey, I just realized if we wouldn't have lost money, even with the roaring 90s, if we wouldn't have lost money in Y2K, we would all have more money not being in the market. And he said, but yeah, you're in your late 20s. You're young. You could take the risk. Besides, long term, the market's still going to win.
Right.
And I wasn't so convinced. I'm like, well, the real rate of return of the S&P 500 the last 30 years has actually been 7.6%.
Yeah.
And most mutual funds never even get that. Give you an example. Last 10 years, the S&P 500 did 10.1%, which was a crazy 10-year period anyways. But Fidelity's mutual funds, even the target retirement date funds, did about just about 8%. And then you have to have the 0.75% fees coming out. So they only made 7.25% when the market did 10.1. What does that mean? Well, if that's a 3% difference almost, right? That means if you were to try to translate that over, that means if it normally does 7.6, you're barely making what, 4.5 to 5%?
Yeah.
Which is more like reality. So when I start to see reality, and even with inflation, I would try to adjust numbers. I like what Ben Stein, the actor, he said. He's like, numbers don't lie, but liars figure, is what his dad taught him. And I would try to adjust numbers. I try to okay, well, if I don't do, let's lower this to 8% average return. Ooh, that looks horrible. Well, why don't I lower inflation from 3% down to 2%? Well, that's a little better.
Right.
And so I'd adjust numbers trying to make people feel better. But in reality, it was hitting at my integrity of well, this doesn't look good. If I put in real conservative numbers, there's not a lot of hope here for people, even if they're starting in their 20s.
Want to find motivated seller leads online, but don't know where to start? Download our free Motivated Seller Keyword Report today. AdWords nerds have spent over $5 million this year researching the most profitable keywords for finding motivated seller leads. And you can grab these exact keywords when you download our report at www.adwordsnerds.com/keywords.
I think it's the stock market always strikes me as odd. I'm invested in stocks, right? I think lots of people are in one way or the other. But it's always the two things that have always struck me really oddly about stocks are, one, the value of your investment in them is so based on the day you decide to take it out. You know what I mean? It's like I had $1 million yesterday and then today and not so much, right? And it's the timing aspect has always felt so strange to me, right? And then the other piece of it is just this really weird, you kind of referenced it when you're talking about mutual funds, but this really weird thing that everybody seems to know, but nobody ever seems to talk about or act on, which is that active management seems to almost always underperform just investing in an index. And it's you get these situations where people have these amazing returns and they're awesome and everyone hoists them on their shoulders and we throw confetti everywhere. But the number of people who have done that, for any significant time period, is vanishingly small, right? Mm-hmm. And it just always strikes me as the smartest people in the world who only do this full time and this is what they've spent their life's work doing, do worse than if I just invest a little bit in everything at once. It's always seemed very strange to me. Do you feel like people have, and let's say the average sort of public here, sort of financial public or whatever, do you think people have just a fundamentally flawed view of what the stock market is and what they're going to get out of it? Is there some truth to our kind of narrative of the stocks? The stock market always goes up, caveat over time, caveat, maybe not for you, but for everybody on average. Is there any truth to that view of the world, or do people just have a fundamentally flawed view of the way the stock market works?
Well, it's those half-truths that always fool people, right? It's if you make something just partly true, you just take a little seed of truth, even if the rest of it's a bunch of crap lie around it, it's still going to be that way, right?
Yeah.
It's like, what was it? It was the movie Pure Country with George Strait, way back in the 90s. Yeah. I think there's a farmer that he wouldn't talk at all, but the one time he did, he's like, when you see chicken poop, you got that white speck's still chicken poop, right? And it's kind of like truth. That speck of truth still makes it believable. So, for example, you mentioned, stock market going up over time. That's true. And historically speaking, we don't know about the future, but historically speaking, if you look at least a 15-year period, stock market's always been up. 10-year periods almost always been up. I mean, the 2000s were a horrible decade, right?
Yeah.
I mean, if you think about it, this is a great example. Just because it goes up doesn't mean that it's going to get you free. In the year 2000, if you had money invested, and I had a lot of clients that were in this case where they threw in money into their IRAs or whatever, and it was in the stock market, and the market hit a high in March of 2000 and then started coming down for Y2K. And then it started climbing back up. And then in 2007, it hits that same high again, and then bam, crashes even worse the next time around with the Great Recession. It took for the S&P 500 till 2013 to hit the 2000 high, 13 years. But because of fees coming out, right? And because mutual funds usually don't perform as well, I didn't start hearing clients say, oh, I finally made my money back until about 2015 when the market had already gone up 25%. So someone might say, oh, at least I'm back to zero. But no, you're not, because in 15 years, I guarantee inflation doubled. So really, you still lost 50%. And that's the problem, is that we are being deceived because all the marketing out there, all the education is being taught by financial institutions, the Fidelities, the Merrill Lynches, the Goldman Sachs, JP Morgans. They're all teaching the same stuff over and over. They're selling us a bill of goods. They teach it to their financial advisors, then teach it to you. I know because I was that guy. All the trainers came from financial institutions trying to get you to sell their product. They were the experts that were teaching financial advisors to then turn around and teach their clients. Even the media. I mean, come on, who's buying all the airtime on Fox News, right? It's going to be the financial institutions. On any money channel, it's always the financial institutions. You're not going to hear somebody come out and say, you know what, these, Merrill Lynch, they suck, and you should totally fire them. They're not going to say that.
So, all right. Well, that begs the question, which is, all right, well, if I'm not going to do the thing, which is you put your money in a mutual fund, put your money in a whatever, right? Just throw it in the stock market, cross your fingers, and hope that you retire on a day where the world is happy. If I'm not going to do that, it begs the question of what we're doing instead. Now, you've talked a couple times about passive income. That's a big part of your story, right? It's like you've had these kind of multiple scenarios where you're like, well, I don't technically have to work. I've got enough money coming in passively in order to pay my bills, and therefore work is a choice, right? So if that is the other option, let's talk about that a little bit. First of all, I would love for you to explain what you mean by passive income. I think a lot of people have ideas in their heads about what that means and what counts and what isn't or whatever. Right. So let's define passive income, and then maybe give us some examples of types of passive income that people generate or that people use in order to retire early or even just make their financial situation a little bit better.
Yeah. The annoying thing is that there's so many people that talk about passive income, and then you really start to pull back the curtain and you realize there's nothing passive about it. Right. For example, there's people in the wholesaling space that say, oh, learn how to make passive income. No, bull crap. I have a whole brand new business as a result of having a wholesaling business that's anything but passive. Yes. So to me, passive income is something that you don't really work hard for, right? You're not actively working to get that return. That could be things like having rental real estate. If you are a flipper, right, or you're a wholesaler, do you cherry pick deals to go get the best ones that you could turn around to be a rental? That money coming in, even though you might be managing it yourself, I prefer never to manage my own properties because I suck at it. I always outsource it. So for me, that's more passive, even though I would put that in the ballpark of kind of semi-passive because you still have to have stewardship over it. And that's true with anything, with money and wealth. You should still manage it yourself, but it doesn't mean you have to be babying it, right? You don't have to be changing its diaper too.
Right.
So let the property manager, the PM deal with the tenants, toilets, and the trash that way. This could be investing in syndications. There's different types of real estate funds, right? You can invest in partnerships. I'm in a partnership right now where they're actively buying and selling raw land, and they're doing seller financing terms and everything else. I'm doing nothing. I just have my money in it. They're doing the work. We split it. I get 70, they get 30, and I'm loving it. I'm making 40% plus returns on my money. There's businesses. You can get a car wash, right? You can even do things like that. There's even syndications that you can invest in car washes. Crazy things that you can do nowadays in the alternative investment space that really, when you look at the stock market, say, why? Why would I want to have mediocre returns with high risk, which is really what the stock market is, specifically mutual funds, right? And that's the one thing that annoys me. And when I see this in the real estate space is sometimes I'll see guys are like, they're going out and they're buying a bunch of crypto, or they're going out and they're trying to invest in stocks or trade stocks, and they suck at it. It takes them away from the very business that they do best in, which is real estate. And, they're just not doing anything with real assets. I like to invest in real assets that generate actual income, real income. And that's the point. You want to get to a point where you work even if you're working in your real estate business, you work in it because you want to, not because you have to. You have enough real estate or passive income coming in that allows you to be able to say, you know what, I could shut this sucker down and be fine. If you're in that place of power, you actually end up growing your business better because you relax, you have a better level head, you're not always money driven.
Yeah. And you're not making decisions based on scarcity.
Exactly.
Short-sighted or whatever.
Hey guys, hope you enjoyed part 1 of this episode. It's just too good to limit to one show. Join us next week to hear the rest.
This is thepodcastfactory.com.